I mean, I don't think the top is going to be 2026. I think, we'll be markedly higher than we are today. If you maybe put a number, let's call it 500,000 by the end of
It's
2026.
outrageous.
I think the market goes higher. I think that this cycle ends with the next US presidential election because the rhetoric is going to change. Whether or not the Republicans or Democrats win doesn't matter. I think that there's going to be a big push about affordability, about inflation, about we need to stop doing this money printing because it's harming the average person in the United States and around the world, and that's going to cause investors to question whether the authorities are really going to continue to just keep printing money, and that's going to cause a market correction.
There's a moment in every market cycle when the noise fades, the narratives crack, and only one thing matters: who actually understands liquidity. And right now, according to Arthur Hayes, the market is completely misreading the single most important macro shift of the decade. While most people are obsessing over charts, corrections, and short-term sentiment, Hayes is looking at the political and monetary landscape forming ahead of 2026, and what he sees is nothing less than a setup for the biggest crypto melt-up in history. Whether people are ready to accept it or not, the next US election cycle is about to redraw the liquidity map. Hayes argues that it doesn't matter who wins, Republican or Democrat. The political incentives are identical: affordability, inflation, voter pressure, and an economy that cannot function without engineered liquidity injections. And when those incentives collide with trillion-dollar deficits, collapsing real yields, and a global wave of coordinated money printing, he believes Bitcoin doesn't just grind higher. It launches. This is where his thesis becomes impossible to ignore. Despite recent pullbacks, despite the chop, despite the fear that the bull market might be over, Hayes says we're nowhere close to the top. In fact, he believes Bitcoin could reach $500,000 by the end of 2026, powered by the same thing that has driven every major cycle since 2008: liquidity flooding into every risk asset on Earth. And while investors are fixated on short-term volatility, Hayes says they're missing the real message. This bull cycle isn't dying, it's reloading. So in today's video, we're going to break down exactly why Arthur Hayes is so confident in this forecast, what he thinks the market is getting wrong, and why the real acceleration phase may only just be beginning. If you're serious about understanding where Bitcoin, Ethereum, Solana, and the broader crypto market are heading next, make sure to hit the like button, subscribe, and watch this video all the way through. You're going to want every detail he lays out.
Is crypto starting the bear market?
I don't believe so. I think that we've just had a little bit of a pause. And for those of you who haven't traded crypto, I mean, I've been doing this for almost 15 years. What Bitcoin dropped? What, 15%, 20%? That's
35.
not really 35. Okay, cool. Whatever. That's kind of like par for the course for a bear market from 125 to, what was it, 80,000 or whatever we dropped recently. That's just normal market behavior. I'm not particularly surprised that we had that sort of pullback.
On Twitter, on X, I saw you post, you believe 80K is the bottom, but you're not going to drop a bazooka load of new capital until the new year. So why not now if we just hit the bottom?
Because I'm going on vacation and I don't really care. I don't really want to think about my positions. So I have a few trips coming up and I don't really want to look at my phone. And so I'm not going to go maximum risk. They'll, just going to leave some stuff on the table and come back and take a look in January. So I wrote an essay about the 4-year cycle and I did a chart study. And I mean, every major crypto commentator has their own opinion on this. My opinion is that the 4-year cycle lined up with a 4-year credit cycle between the Fed in the United States and the People's Bank of China and China. And that sort of gave us this impression that there's this programmatic 4-year cycle when in reality it was just a credit cycle. And so we went from the money printing of the US and China after the global financial crisis in 2008, 2009, which led to 2013. Then we went into a second massive Chinese stimulus post GFC in 2015 when they reflated their housing market again. Then we went into the COVID era stimulus in 2021, led by the United States. The current bull market has basically been powered by the reverse repo program, which basically is this program that had about $2.5 trillion in it. And Bad Girl Yellen, the former U.S. Treasury Secretary, engineered a way to reduce that down to zero over for about 18 months, from about September 2023 until 2025. And that was basically the catalyst that launched every single risk asset, whether that's crypto, gold, stocks, housing, whatever you want to call it, from then until now. And now we're basically in this transition period where, Team Trump and his Republican Party are going to print a ton of money to try to win an election in 2026. And the rest of the world is also printing money as well, maybe not to the same extent in the United States. So again, I just read the newspaper. And the newspaper, the politicians tell me that they're going to fight people, they're going to drop bombs, they're going to build things. Very rarely do I hear about raising taxes on a general level, other than, yeah, we're going to tax the rich people, whatever that means in your political context. But everyone else is not going to, is going to get all these great goodies, and they're not going to pay for it. And that's literally the message from every single politician all around the world. So it's show up at the polls and vote for me, or if you're not in a democratic society, please don't get angry. Support me as your strong person, as a leader. So I don't think that we are out of this money printing phase yet. And so, yes, we've had this sort of pullback in Bitcoin because of a lull in money printing in the United States due to some technical factors, government shutdown, change of the guard at the Fed, those kind of things. But I think in 2026, we resume standard operating procedure, which is print money, and Bitcoin, crypto, stocks, real estate, everything keeps going up. I think that we are at the end of the beginning of this cycle, and the massive amounts of crazy bull market money printing is ahead of us. And what informs my opinion on that is the Republicans in the United States have an election to win in 2026. They got their ass kicked in a few specific elections this November in New York City, some other states, and the governor's races. And the message was affordability. The message was, where's my goodies? And so they've got to go back to the well and, print some money and hand it out, just like the Democrats are going to do in their cities and their states. And so it's all the same program, at least in the United States. It's printing money. In China, they're battling the deflating housing market. They're not going to go as crazy as they went in 2009 and 2015, but they are going to add stimulus to their economy to make sure that the housing collapse is managed appropriately. And at some point, we'll see maybe all the deflationary impact of AI in China prompts general angst, and they print money to mollify their population as well. Over in Japan, the new prime minister just launched one of the largest stimulus programs since Abenomics about a decade ago, or however long he was in power. And so we have stimulation in Japan, in Europe, because they're afraid of Russia for some nonsensical reason. They're going to print a bunch of money to build up their military, and that is going to print money in Europe. So I think that the fireworks are just beginning in terms of what assets can do. And I think that the upside is under-owned by a lot of institutional investors. I think retail investors get it, right? They've been fucked so long by not owning enough financial assets. They're buying leverage ETFs. They're buying zero expiry options. They're trading crypto. They're trading meme stocks. They understand just go YOLO, and the money's going to get printed and it'll save us. Institutional investors are trying to be a little bit too cerebral about it, and which means they're under-owning the upside. Well, I think Bitcoin is forecasting a 20% or some sort of correction in the stock market. That was a move from 125 to 80. Bitcoin is the last free market smoke alarm of liquidity. And so we'll see if stocks catch up with Bitcoin, or if, starting in December when the Fed stops quantitative tightening and some other technical factors in the money markets, the stock market collapse that Bitcoin is sort of previewing happens or not. I mean, obviously, I think the number one thing is liquidity at the end of the day. That's all that matters from my perspective. If you get that right, then obviously you can come down into the, okay, well, other than Bitcoin, what other altcoins or shitcoins should I be trading? And that gets into sort of style and what narratives are popular in 2026. I happen to think that the privacy narrative will be a big one in 2026, and this is sort of foreshadowed by the rise of Zcash over the last 2 months. It's gone up, I don't know what, 10x or 10 to 20x, depending on when you got in, from 30 to like $600. Now it's around $500 a coin. But I think this is going to be the new narrative: zero knowledge proofs, privacy, quantum resistance. Whether or not these things are actual risks to the ecosystem is not the point. People are scared, and they're going to invest in things that they believe are going to ameliorate these risks.
Arthur Hayes begins by dismantling the idea that crypto is entering a bear market. For him, the recent 15 to 35% pullback isn't just normal. It's the exact kind of volatility that has defined every single Bitcoin cycle. What matters isn't the dip, but the liquidity conditions around it. Hayes argues that the sluggishness in price action has nothing to do with weakening demand or fading interest. Instead, he points to a temporary lull in U.S. liquidity caused by political gridlock, treasury constraints, and shifting Fed personnel. In his view, this pause is structural and temporary, and once it clears, the liquidity engines that have powered the entire bull market will restart stronger than before. But the second half of Hayes' analysis turns darker and more revealing. He explains the October 10th crash not as certain evidence of price manipulation by Binance and others, but as an inevitable consequence of leveraged traders' misunderstanding of exchange mechanics. A small exploit in how collateral was marked triggered cascading liquidations, wiped out market makers, and sent liquidity evaporating across altcoins. The damage wasn't just financial, it was psychological. Traders are now gun-shy, hesitant, and slow to re-enter. Hayes believes this fear will linger, even as markets recover, and that hesitation is exactly what creates asymmetric opportunities for those who understand what's coming next. Let's get back to the video.
October 10th was sort of this crash on Binance and some of the other centralized exchanges. It was a crash across the crypto ecosystem, started on Binance for some idiosyncratic reasons. I have there's a lot of conspiracy opinions at CZ, and there's this cabal of market makers, and they, came up with a secret scheme to fuck everybody over because the prices on Bitcoin and altcoins dropped so precipitously quickly. But it's very simple. There are a bunch of rules that every exchange operates under, and they publish documents that nobody reads. And I've been doing this for a long time, and I've written a lot of these documents, and a lot of my clients at BitMEX didn't read anything that I said until something happened, and they say, why did this happen on the exchange like this? And I go, did you read that document that explained how this particular feature of this product worked, or our policy if this or that happened? And then people just look, oh no, like something was surprised. Well, Binance had a policy for how they marked their margin positions if you were using cross collateral, right? So I use some stable coin to margin a position where that stable coin is not the base currency. And because they were marking specifically Ethereum and some other stable coins to their own market, which is less liquid than the global market on Curve, somebody exploited that. And they were able to dump a small amount of money relative to the size of the liquidation that caused, which basically caused cascading liquidations on Binance, on sort of these margin currencies. And because of the system that they employed, number one, market makers had to de-risk and remove liquidity from the markets. Binance is forced liquidating a bunch of people at the same time, so there's not a lot of liquidity in the markets. And to top it off, they had a tech issue with their API, so people couldn't see their positions, couldn't trade, and so you basically had this risk-off event where altcoins went down, 85, 90%. A lot of clients were levered, or they had delta neutral positions, meaning one long and one short on Binance or another venue, and they lost money. A lot of these looping strategies that people were doing on DeFi protocols, which basically had these like leverage positions upon leverage positions in these protocols, those were also affected because the mark prices of the underlying collateral went down so quickly. They got impacted. So you saw a lot of these lending protocols suffer some catastrophic failures and went out of business. And so you had traders, over leveraged traders go out of business. You had market making firms who didn't understand how these things worked on the exchange. They suffered massive losses. And so you have this massive removal of liquidity from the crypto markets. And that obviously adversely affected a lot of altcoins. Was this some sort of secret, conspiracy by CZ and all these exchanges? No, this is just crypto traders being crypto traders and not reading the documents that explain exactly how this stuff worked.
Because of this blow up, are you expecting a further unwind?
Not necessarily. I think this is mostly, I think what's going to affect is it's going to cause a lot of traders to be very tepid in getting back into the market. A lot of capital was destroyed. A lot of people saw the real value of these shitcoins they were trading, which is basically close to zero. They have no organic demand other than a bunch of market makers who are paid to provide liquidity. And when they're not there, then obviously your token's worth zero. And I think that's giving people, they're making them gun shy. And so they're not going to participate if the market heals and continues to go higher. And I said that's probably the risk that I see. Will there be some DeFi protocols that have some, hidden bodies under the surface? Absolutely, but I don't think any of the major protocols are going to suffer any sort of 2022 like sort of blowups.
What is the market currently getting wrong about Ethereum?
I think that Ethereum is a choice of traditional institutional investors if they want to do Web3. I've been doing this a long time. There's always been talk about distributed ledger technology or we love blockchain, not Bitcoin, all these sorts of things. It took all these organizations like your large banks a very long time to understand that all these bullshit projects that were sold to them by a bunch of ex-TradFi people trying to do crypto like R3 and Corda and these sorts of things is nonsense. You can't have a private blockchain. You must have a public blockchain for security and to actually have real usage. I think the message has finally started to get through, especially with the stablecoin narrative. And so you're going to see large banks start doing crypto and Web3 using a public blockchain. I think the public blockchain will be Ethereum. And that's what is going to power this sort of next move higher in Ethereum. This is something that Tom Lee talks a lot about, the CEO of BitMine. I really subscribe to that thesis. And that's what I think is going to drive the Ethereum, resurgence of the price. The security layer is still Ethereum. The Ethereum community might have to revise how fees are distributed between secrets or fees at the L2 level and then what is paid at the security level at the L1 level at Ethereum. That's a debate worth having within the community. But at the end of the day, whether it's an L2 that's based on Ethereum like Arbitrum, Optimism, these sorts of things, or it's the L1 Ethereum, this whole ecosystem is going to be used by TradFi to achieve whatever they want to do within Web3. So obviously Solana has done very well. I think the Solana move from 7 to 300 was driven by meme coins. The meme coin activity was on Solana. Obviously, meme coins have sort of died in terms of activity relative to what it was in sort of like 2023 and 2024. Solana needs a new trick. I don't know what that new trick is, but again, it's the number 2 largest L1. I think they'll find something. Will it be enough to power price performance greater than Ethereum? I don't think so, but I think pretty much every other L1 besides Ethereum or Solana is a zero. And they're not going to do very well. The newest one is Monad, right? I think I've been on Twitter trying to tell people that I bought some and I did buy some. I think it's going to be another bear chain. It's going to go down 99% because it's another high FTV, low flow piece of VC L1. However, every coin gets their first pump. And people want to believe in the new L1 because everybody wants to invest in the new Ethereum like they would have in 2014 when everyone missed it, me included. But again, that doesn't mean that it's going to actually have any real use case.
If you had to pick a magnificent 5 for crypto, what protocols would be in that 5? Ethereum, Solana, what are the other 3?
Bitcoin, Zcash, what would be the other one? Athena.
After watching cycles come and go, after seeing every so-called Ethereum killer rise and collapse, he cuts the noise down to 5 names. The only ones he believes will truly matter. Bitcoin for pristine, unbreakable collateral. Ethereum as the global settlement layer for institutions. Solana for hyperspeed consumer use cases, even if it still needs its next major catalyst. And then Zcash and Athena, 2 projects Hayes sees as critical for the next era of privacy and programmable financial networks. Everything else, in his view, trends towards zero. Not because the tech is bad, but because liquidity is finite, attention is finite, and markets eventually compress into a handful of assets with real users and real demand. He doesn't say this to be dramatic. He says it because every cycle has proven it. From EOS to NEO to Aptos to Monad, the pattern never changes. High valuations, low float, massive hype, then a 90% collapse once people realize there's no durable use case behind the marketing. But what makes his analysis so compelling is that Hayes is still incredibly bullish on the broader crypto ecosystem. Not despite this consolidation, but because of it. Fewer winners mean deeper liquidity. Fewer distractions mean stronger conviction. And as we move into 2026, He believes crypto is entering a phase where the surviving assets don't just recover, they dominate. Liquidity will rise, political incentives will align, and the crypto projects with real economic gravity, the Magnificent Five, will absorb an unprecedented amount of global capital. Hayes isn't calling for a mild recovery or a cautious drift higher. He's calling for a full-scale repricing of the entire crypto economy. A world where Bitcoin doesn't just reach new highs, but sets a new macro benchmark. A world where Ethereum becomes an indispensable infrastructure. A world where Solana finds its next explosive growth cycle. And a world where privacy-preserving networks like Zcash and Athena become essential in an era of tightening surveillance and financial fragmentation. If he's even half right, the next 12 to 18 months could be the most transformative period this industry has ever seen. And drop a comment telling us which of Hayes' Magnificent Five you think will lead the next crypto supercycle. So if you found this breakdown valuable, make sure to like the video, subscribe to the channel. The future of this market is being built right now, and you'll want to be here when the next phase begins. Thanks for watching.